Ladies and gentlemen, this is the most important video I have ever made. I'm making public my Patreon exclusive Tesla DCEF valuation model. Is Tesla worth $20 or is Tesla worth $2,000? I'm going to tell you the exact price I think they're worth down to the penny. Let's boogie. So yeah, chime on my cat says to like and subscribe. So yeah, nothing new in Tesla land, right? They're only up 7% after hours. Gee, I wonder what could have happened. So yeah, Elon won the shareholder proposal for both his share package and moving to Texas. He says both Tesla shareholder resolutions are currently passing by wide margins. Thanks for your support. So, what are the margins? Extreme. 73% are for the shareholder package, and then he also won the Texas votes. Now, the whole Mars catalog asks, okay, Elon, we got you the options. Now you have to make Tesla the most valuable company on Earth. Deal? Elon replies, yes. So yeah, other new news, Waymo issues software and mapping recall after their robotaxi crashes into a telephone pole. So what happened here? What happened here is that there was an error in their HD maps. It didn't include the correct information on the height difference on the curb. And as a result, it crashed into the telephone pole. Now, this is why HD maps do not work. HD maps do not work because streets are dynamic. The world is dynamic. How can you have a static map reflecting a dynamic world? You can't. It just does not work. It does not take into account things that change. If you get a new on-ramp, it's not going to know. If you add a telephone pole, it's not going to know. As you can see here, it just doesn't work. So yeah, moving on from that, we also have the compact cars coming into solidification. We're going to get information on that soon. Hopefully on August 8th in the robotaxi reveal. So yeah, here's a mock-up of it. Just generally what it's going to look like, the shape of it. It's going to be a small, slim car. You can see it's a two-seater. And also, the robotaxi reveal is on 8/8. So, other new news, FSD is now $99 per month. So that's to increase the take rate. And let me hide my face really bit. Just a second. Okay. So yeah, AI Proxima says, I feel sorry for people who don't understand Tesla FSD. I tried version 12 for the first time today, and it's like magic. And it really is. You have to see the videos. If you haven't seen it, check out the videos on YouTube. It's amazing. It's an amazing upgrade from version 11. All right, so the other new news, the Cybertruck. So yeah, the Cybertruck is getting publicity up the wazoo. You have celebrities just buying the Cybertruck and driving it around. They're not paid to do this. They just love the vehicle. You have Kim Kardashian, Jay-Z, Lady Gaga, Jay Leno, Serena Williams, Justin Bieber. It's crazy. I've seen it myself at a road show, and the car is amazing. So what else do we have? FSD version 12, the mileage on it is up to nearly 1.4, it's about 1.3 billion miles driven in FSD. And this is video data Tesla can use to train its neural network model. Now, this is the benefit that Tesla has over their competitors. Waymo only has 675 cars on the road. That's virtually zero compared to Tesla. It's insane. Now, here's the cumulative miles driven with FSD beta. You can see the spike recently. Now, also recently unveiled was the actual robotaxi application that Tesla is working on. It's a mock-up. So this is what currently they think it will look like on your phone when you hail a robotaxi application. Moving on. So what I'm not going to include in this DCEF valuation model is the bot. I simply can't value it right now. It's too early. In the future, I can value the bot, but right now I can't. So it's not part of this valuation. All right, so no other new news. Actually, I'm hiding part of it. Here we go. So the cost of goods sold per vehicle has declined substantially, and this will increase Tesla's profitability. As you can see, it's recently at just above $36,000 per vehicle. Good stuff, right? I'm still hiding the screen. Holy cow. All right, so yeah, energy storage deployments are skyrocketing. Now it's about over 14 gigawatt hours in 2023. I think you can show me again. Here I am. Okay, so yeah, on the income statement, you can see it's been skyrocketing exponentially, but it's been trailing off lately. Lately, there's been issues with interest rates. Interest rates have spiked due to inflation. Now, eventually, at some point in the future, interest rates will go down. But until they do, margins are going to be diminished as Tesla goes for market share. And that's the long-term goal, is to gain market share. In fact, Tesla is so fervent in this that they are the only profitable EV maker outside of China. The only profitable one. I mean, Ford loses billions of dollars per year. GM, billions of dollars lost per year in their EV divisions. It's insane how much money they lose. And Tesla is profitable in their EV divisions. Their most recent income statement, they noted a free cash flow decline due to inventory issues, but that will correct in this next quarter in Q2 in a couple of weeks. So anyway, this will improve once things stabilize. As you can see, the vehicles delivered have been good and have sort of trailed off lately. Again, this will improve once rates decrease. So historically, you can kind of see it here. It kind of matches what you saw before, but in 2023, Tesla logged $96 billion in revenue, cost of goods of $79 billion. Now, the thing is, I don't include stock compensation in my DCF valuation. The reason is because it's sort of it gives an unnecessary, it's a real expense. For shareholders, it's an expense. It may not be cash, but it is a real expense for shareholders. So, what is a DCF? A DCF is a discounted cash flow model. It's a popular way to value a company. What it does is it takes a company's all of its future cash flows and discounts them to today's value using a discount metric. WACC is the most common. So anyway, that's basically all you need to know about that. And it's used in many different areas. Now, here's the goods, and this is my gift to you. Thanks in advance. Oh, and all I ask for is a like and a subscribe. And please share this video. I mean, I'm going to give you the good. This is everything I have. So anyway, what we have here is Tesla's, my projections for Tesla's, their factories and the output for each factory. So you can see Fremont, Shanghai, Austin, and Berlin, Mexico, and going forward to further factories in the future. And then from that, you can delineate the cars on the road at that particular time. So you get the estimated yearly production. So I'm estimating 15.8 million cars in 2033. This is for my base case. Average selling price of $35,000. And then adjusted EBITDA of $77 million. And then that's 81 million cars on the road in 2033. And this will be important in the FSD model I'm about to show you. I'm sorry, in the robotaxi model and FSD, both. You'll see. Okay, so in graph form, this is what it looks like. A little bit prettier, right? Okay, so for energy, I'm projecting growth rates from about 50% today, gradually trending down to 10% in 2033, of revenue of $57 billion in 2033. Here's energy in graph form. Oh, and also I forgot to mention, ARC recently released their valuation on Tesla, and they're estimating Tesla to be worth $2,600 by 2029. Sorry, I don't have a slide for that, but just trust me on that. Their base case, or sorry, that was their base case. Their bear case is $2,100, and their bull case was, I think, $3,100. You can double check on that one. And that's what kind of prompted this video for me, because these are my numbers. Those are their numbers. These are my numbers. Okay, so yeah, for FSD, you can see right here the cars sold for that year, and then the cars on the road. That was taken from that previous spreadsheet. Now, from here, you can see that it's split off into two different sections. One's for people to choose the flat fee. This is where you spend like $10,000, $15,000, and then that's it. That's the FSD price, and then you get it forever. And then the other one is monthly. So generally speaking, as you can see, the monthly one's going to outstrip the flat fee model by a significant margin. I'm estimating by 2033 that yearly revenue for monthly FSD will be $145 billion, and then the flat fee will be $39 billion for an adjusted EBITDA of $148 billion. That's half the size of Apple. That is half the size of Apple. They're huge numbers. And that's just FSD. That does not include auto. That does not include robotaxi. That does not include energy, Optimus, nothing else. Just full self-driving, which is software as a service. That is huge, massive margins. Here it is in graph form. Okay, so branching into robotaxi. What I'm predicting for robotaxi is what we have to figure out is how much it's going to cost per vehicle, per mile, per year. So in my estimation, for each car is going to be driven 50 miles per year. The tire lifespan will be 50,000 miles, which is about average. It'll cost about $500 for tire replacements. The cleaning per year is $2,000. Servicing per year is $200. So for per mile costs, I'll just say in total, it would be 8.4 cents. Now, please note that depreciation and insurance are covered in the operating statement. Tesla would want to buy good quality products to help prevent accidents, but can buy in bulk to reduce costs. Older cars require more servicing than newer cars, so this is averaged. We are not sure how Tesla's cars perform later in life, so this value is subject to change as we get more data. All right, so what does this give us? So yeah, this is the cost per mile per year for robotaxi. And here's the robotaxi numbers. So I'm estimating that the robotaxi cars will cost $25,000. Again, this is the robotaxi segment. So the robotaxi segment has to purchase the cars from the vehicle segment. So the vehicle segment has to sell the cars to the robotaxi segment for the same price that they would sell it to an external customer. So that's why it says $25,000. It may cost Tesla, $20,000 to make the car, but for the robotaxi segment, I have to put $25,000. That's the reasoning there. I'm estimating a salvage value of $5,000, a useful life of 5 years. That may increase. It really depends. We'll have to see on that one. If it does increase, then that would boost these numbers dramatically. So depreciation per year of $4,000, insurance of $2,000, registration of $200. So anyway, I'm predicting that robotaxi is going to go live in 2026. That's my estimation. So they're going to, I think, do an initial rollout of 10,000 taxis in 2026, gradually scaling. This is per year. This is taxis added per year. So 10,000 taxis in 2026, then an additional 100,000 in 2027, up to 2.25 million added in 2033. So that gives you a taxis on the road of 9 million in 2033. So again, this is a DCF statement. So what you have to do is you have to subtract capital expenditures from these numbers. And due to subtracting the capex, that's the reason why the adjusted EBITDA for the first few years is actually negative. Because Tesla has to buy these cars, for this division, has to buy the car for $25,000, Now, obviously, it's not going to be profitable in that first year yet. It'll take a few years for that single car just to achieve profitability. That's the reason. So anyway, I'm estimating that adjusted EBITDA will actually start off in 2026 at negative $1.1 billion, going to negative $6.8 billion in 2030, but then increasing to a positive $50 billion in 2033. The only thing is that I wish that this was a 15-year chart, a 20-year chart. Can you imagine how big that number would get? Look at the numbers. 2032, $26 billion in adjusted EBITDA. 2033, $50 billion in adjusted EBITDA. That is a doubling of profit in robotaxi from those 2 years. So that's just when robotaxi is going to start skyrocketing. So I wish I could do a 20-year DCF, but I can only really do 5 years, maybe 10 years. I max out at 10 years because I can't really predict with any level of accuracy after 10 years. But as you can see, this is actually kind of a bearish case in my opinion, because when you extend beyond that, I can't account for that yet, but it will soon. But yeah, it's going to become a massive business, assuming it comes to fruition. Now, for the WACC on Tesla is 14.98%. This is primarily because they are extremely volatile. So it has a very high beta of 2.43. Okay, so what I did on Tesla is, okay, this is my present. This is my present to you. And I'm going to tell you why in just a second. I actually did 3 different valuations. And this is not your traditional bear, base, bull. I didn't do that. I did it by segments on what you think Tesla will be able to achieve by 2033. So in 2033, if you think Tesla will achieve only auto and energy, I think the implied share price is $242.71. Now, this is equivalent to ARK's estimation of auto only, where they did $350 by 2029. So anyway, if you tack on, you think FSD is going to be a success and it's going to pull in the numbers that I just showed you, then the implied share price skyrockets to $700.46. Please note that this would be the implied share price today. So I think if it is a certainty that FSD becomes a massive money maker, and that's assumed today, Tesla should be worth $700 per share. If you add on Robotaxi, the number bumps up to $840.44. Now, again, remember, this number would be much bigger if I could go beyond 10 years. If I could go beyond that 10 years, this number jump up above $2,000. But I can't. So yeah, this is where I'm at. And let me know in the comments below, what do you think Tesla's worth today? What do you think Tesla will be in 10 years? What do you think their stock price will be in 10 years? Do you think Robotaxi will be a thing? And you know what? Don't forget to like and subscribe. Again, these models were actually on my Patreon for 4 months exclusively. If you want to visit my other exclusive DCF valuation models, I have Intel, I have AMD, I have NVIDIA, I have multiple other companies. Just visit my Patreon. And don't forget to like and subscribe. Thank you for watching, and I will see you in the next one.